How I use the real stock value tool. First, I will show you how I use it on a whole index. I will take the S&P 500 index, write in the price of the S&P 500 index, the book value per share, earnings per share, sales per share, and dividends. I need to type in some kind of metrics, values that I consider good values. For this I picked the S&P 500 historical averages. So the historical average for price per book ratio is 2.75. For price to earning ratio is 15, and for price to sales ratio is 1.4, sorry. I select the weights of these three parameters. So in this case, the book value should be 33%, the price to earning 33%, and the price to sales 34%. In this case, I also add the dividends to the final price. If I select here a bigger number, then dividends will be multiplied by this number, and that will be added to the final price. I press calculate, and based on the input that I selected, the computed price of the S&P 500 now is 1,723. And there's a premium, so it's 10% overpriced based on this data. I can select different metrics. Let's say, how does it compare, let's say, to the 2000 peak. In that year, the price per book ratio was 5, price per earnings 44, and price per sales 1.8. Based on this data, it's still a 75% discount. Now I can use the same tool to find out if a given stock is undervalued or overvalued. Let's take the example of Apple. We just write in the Yahoo Finance ticker name, get the data from Yahoo Finance, select the metrics that we would like to use, and press calculate. We can see that based on historical averages, the Apple stock price should be $86, and there's a premium of 13%. We can select different metrics here, or if we are not satisfied any of these, then we can select manual, and we can just write here any number and compute based on that. We can also change the weight. Let's say I consider that book value is more important and price per earning is not that important. Then I can choose book value 40%, price per earnings 20%, price per sales 40%. Based on this, the value of Apple is 78, and we have a premium of 22%. If I select the data from the 2000 dot-com bubble peak and I compute based on that data, then Apple is at a discount of 56%. Currently, this tool does not allow to take into the consideration the growth. So currently what I do is just type in the data. I consider that it will be true in a few years, and I compute based on that data. A more advanced version of this tool that does take into consideration growth of a stock, and also interest rates is coming soon. Please give some feedback. I hope that you find this useful. Thank you. Bye.